Alibaba just announced that they're going to withdraw their Cinyao IPO, and I'm actually very excited about this because it's something that I've been weary about for a long time. But let's dive into it a little bit further. And so you're watching More Money, let's get it. What's up, guys, and welcome back to the channel. Let's dive right into the news. So Alibaba recently just announced that they're going to withdraw their Cinyao IPO application, and instead they've proposed to acquire all the outstanding shares from Cinyao's minority shareholders. Now here's the thing, guys, from the beginning, when Alibaba wanted to spin off many of their operations, the challenge that I had was with specifically the Cinyao operation, because it's embedded within so many other businesses of Alibaba. Look, Cinyao to Alibaba is just as important as Ant Group is to Alibaba in terms of the payments. I mean, at least with payments, they can use other payments providers, but Cinyao, it really is the logistics arm for the company. So it just never made sense that they would spin it off. Now, they did provide a little bit more information subsequent to telling us that they were going to IPO it. And what they said was they were going to always hold majority shareholdership of that business. So that made me sort of like less weary about it because it's so critical to the operations. But the fact that they're just going to own the whole thing, that makes a lot more sense for a couple of reasons. One is that it's critical, and two, it's just growing really fast. This is a future focused, rapidly developing industry. So diving a little bit into the press release, you can see that they've withdrawn their IPO, and of course they plan to offer minority shareholders an opportunity to sell all of their shares at a total value consideration of $3.75 billion. So that's absolutely nothing relative to the amount of US cash that Alibaba has on their balance sheet. And the one thing that kind of annoys me is that they're just now wanting to acquire the minority shareholdership or the minority stake of Cinyao. They should have wanted to do this a long time ago. I don't understand why it took this long. It's just such a critical business, but it is what it is, and it's easy to armchair quarterback here. Now, Alibaba owns approximately 2/3 of the company, so it'll be wonderful, at least in my opinion, that they take over the rest of it. What are they going to do with it? Of course, they're going to support Cinyao's long-term strategic expansion of its global logistics network. And again, I've always been weary about the Cinyao spinoff. It's critical to the domestic and international segments. And another point that I want to make is that one area where they're having challenges is Pinduoduo is eating their lunch. And so one of the ways that they're competing with them is using the Cinyao logistics network to help their Tao Sai Sai brand. And so that seems to be what's happening. It seems to be winning. I'd like to get more information on it, and hopefully with the year-end results coming up, we'll get a little bit more information on how that particular business performed in conjunction with the support that it's been getting from Cinyao. And so just a quick overview of the Cinyao business. You can see that they have a consumer logistics division, which of course has no comparable peers. They have an international logistics network, which I'm very excited about. They have the domestic smart supply chain, which everybody's aware of. JD.com also has it, which is really, what you think of when you order from Amazon. Amazon has their own distribution network here in North America, and so the manufacturer to customer fulfillment, omni-channel supply chain solutions, and a city delivery network. So very similar as what they have set up down there. They also have logistics parks and of course technology to move this business forward. And just focusing on the consumer logistics piece, you can see that they are way ahead of even what we see here in North America. They have digitized unmanned posts operating 24/7 for you to pick up your packages, as well as unmanned delivery from post to door. So they have 300 plus unmanned vehicles deployed. I feel like the reason why we don't have those here is because we might just have a lot of space in between homes, and it might just not be practical yet, whereas things might be a little bit more condensed in China, and so you're able to do this. But whatever the reason is, they seem to be on the leading edge of technology when it comes to this stuff. And of course, the international logistics network is why I was weary on Alibaba giving up this or IPOing this and giving up more ownership of this. And really it was because they are offering global delivery essentially for the price of a coffee, right? And so this is what's helping their brands overseas. So when you see international segments growing at rapid paces, this is what's fueling it. They have an inbound supply chain to get products into China to be manufactured as quickly as possible. And then of course they have an outbound freight network and an outbound parcel network. So this is what it is. This is needed for this business. And finally, they have these smart logistics parks where they have domestic logistics parks for merchants. They have domestic sorting centers for logistics companies, integrated complexes for businesses and logistics. That's pretty interesting, right? Overseas e-hubs, and I think that's really important, especially as they try to make the company more international. I think that's going to be essential for international trade. And then they have overseas warehouses for merchants as well. So they have 10 million plus square meters of assets under management, and this is only growing. And I just wanted to show you how fast this segment is growing. Notice this is the 9 months ended, so this is the latest quarterly results that we got. And so on a 9-month end basis, the Cinia business grew 27%, whereas the overall business grew at 9%. Now, I just want to point out, Taobao, Tmall, 6% year-over-year growth on a 9-month basis. That's not bad. But you can see that this Cinia Smart Logistics Network is what's fueling the growth in the international business. And so you can see that international commerce is up 46% on a 9-month basis. And so this is why this segment is super critical to Alibaba, and I'm very excited that they're maintaining it and actually expanding ownership of it within the company to 100%, or ideally to 100%. Now, some of you might be asking, what are my thoughts on Alibaba trading at around $70 per share? Now, I recently got a little bit more conservative, as promised, that I was going to with the last call. And so, I'm valuing the company at around $105 per share. And then, of course, they have a ton of excess cash. The terminal multiple I'm using, I think it's fairly low relative to how much I expect international commerce, just internet commerce to continue to grow. But we'll leave it at that. So overall, I think the company's worth, at a bottom of the barrel level at around $140 per share. You can easily make an argument that this company's worth $200 per share, but I'll stick with that. So it is trading at less than half of what I think its intrinsic value is. And of course, this is not a recommendation or a share price target for any of you guys. That's not what this is. It's just my own interpretation using my own belief on where the particular segments are going. Valuation. And so what does the current share price reflect? The current share price reflects around 11.5 times earnings, which is an 8.7% equity yield. But what I want to point out to you is this 3687. I just want to break this down a little bit more for you. And this is just from the Alibaba model that the Patreons get access to. You can see that as of December 31st, which was their latest earnings release that they put out, I included the cash and the short-term investments and their equity securities. Their investments in equity method investees, I actually brought down to zero. There is value here, and you could argue that it's excess capital value, i.e. they might be able to sell off Ant Group, so there's some cash that's expected to come in, blah, blah, blah. I just put it to zero to be conservative, and then I tacked on all of their debt to reduce from this excess capital, and it brings me to around $36.87 US dollars per share of excess capital. So that's how I get to that. And of course, guys, you guys can access all of my models, including the Alibaba model, at that lower tier of the Patreon. And if you want to join us for a live epic presentation every month, you can join us at that higher tier. Now, I want to know from you guys, what are your thoughts on Alibaba completely acquiring the Cinia network? Is this good news? Is it bad news? Or is it just meh? We'll wait and see what transpires with the overall business, especially the Taobao and Tmall group going forward. So I'll leave it there. Let me know in the comments below, and don't forget to like and subscribe. See you later, guys.